Let's start with the crude oil prices, and you have seen gains coming in there. The Brent is trading at a 109 on your screens, 0.5% of a gain coming in there. There is optimism in the market that the Fed will signal a slower stimulus tapering to reduce the risk of hampering the world's biggest economy. The NYMEX is trading on the higher side as well, 0.25% gain on that, and we are back above $100 a barrel for this one. Let's take a look at the spot gold prices, and that have climbed to the highest in nearly 3 months as investors look for hints from the new Fed chief on whether the pace of its stimulus tapering will be slowed. The US gold futures have gained nearly a percentage point. On your screens, we are looking at $1,285 per ounce. It's the highest level in 2014. The prices have been climbing up for a 5th straight day, and it's the longest winning streak since August 2012. Same is the case with silver as well. Let's get that on your screens as well, and it's the biggest gains in the last 6 months coming in for the silver prices. Also, we are looking at $20 per ounce come back into that space, more than 0.5% of a gain on your screens. Let's get on board then. Vijay Bambani, who's CEO BSPLindia.com. Also joining us is Stephen Luzier, who's Global CEO for Forever Mark De Beers Group. Bhaskar Bhatt is MD Titan Industries, and we also have Kishore Narne, who's Associate Director, Head Commodity and Currencies at Motilal Oswal. Vijay, let's start with you first. And the kind of run-up that we have seen come back in case of the gold prices, more than 6% up in 2014 now. Would you say that all the contrarians perhaps really have seen a big thumbs up?
Manisha, what you are seeing is a fear of deleveraging across the board in asset classes, both financial and hard assets. And when money moves out of one asset class, it typically tends to flow into the other. So the weakness that you are seeing in industrial metals and some amount of unwinding even in agri-commodities, I think some amount of money has flown into gold and silver. But I think the euphoria seems to be a little premature, because I would give the second half of the calendar year 2014 as a better time to invest in bullion. And even then, within the bullion space, I would favor silver over gold.
Kishore, what's your sense now really coming in for the gold prices? Good gains coming in here, even in the Indian markets, 29,000 really seems to be back. How would you look at these current levels in sense of intraday buying and slightly longer term as well?
I think, Manisha, intraday, I think momentum looks still positive. 29,250 is possible. But again, really, if the trend has to sustain, we need a good assurance from Ellen today in her testimony that probably the speed of tapering would be slowing down, or the Fed might be sounding a little dovish. But until unless that really happens, the sustainability of the current trend is really questionable. So if she sticks to her plan of tapering, and if she still hints that the QE will end by the end of 2014, so we may see gold dropping back to around to 1240 kind of levels.
Kishore, also what's your sense on the silver prices? Because the rebound there has been even better, especially when the gold prices run up. Silver tends to outperform on either sides. In that sense, what kind of a range are you working with on?
I think silver again has a tendency to outperform, no doubt in that. But again, more or less silver is being stuck in the range rather than gold. Gold has been trending both ways, but silver has been in a really tight range for almost a month or more than a month now. So I think anywhere close to 45,500, 46,000, there are strong resistances on the charts at least. And international markets are looking very positive about the 20.60 kind of level, 20.65 kind of level. So I think over and above that, probably we can see a sustained uptrend. And on domestic markets, anything above 45,500 to 46,000, we should expect the trend to continue. But otherwise, we should be getting resistance close to 45,500 kind of levels.
Fair point. So even as the gold prices have gained 6% in 2014, the international markets, the Indian markets really continue to trade in the premium. Because of the CAD concerns, you have seen the gold policies continue in 2014 as well, and that clearly has given an impact into the Indian prices here. Mr. Bhatt, what's your sense really? How do you see the current gold policies, and what's your sense on the impact that it has had on the industry?
One can only expect that there will be some rollback. How much, etc., because it is operating at many levels. One is the customs duty itself, which is at 10%, and that is leading to, unfortunately, to smuggling. The second is the 80-20 rule on import of gold for domestic consumption has squeezed supplies. Local supplies for local manufacturers are hard to come by, and as a result there's a premium in the market. So our prices have a double whammy. One is the customs duty itself, and the second is this short supply.
Well, absolutely. Also, Mr. Bhatt, as the premiums have gone up into the spot markets, has the buying gone down because of that? Because much of this price really has been passed on to the customers.
Indian consumer is much smarter than all of us put together. Even with these high premium prices, the price today of gold is lower than what it was last year, the on-the-ground price. Therefore, the consumer has kept away, because consumers buy when they see the price rising steadily in the future. So there's an adjustment. So when the price fell in May, June, July, there was a surge, in fact May, June, and then it has, the demand has really, the investment demand of gold has really almost stopped. The attractiveness of gold as an investment temporarily has gone away.
Well, as the gold has seen a bit of a decline, and as Mr. Bhatt was pointing out, the Indian consumer really is a smart one, and we have been buying at all of those dips there. But another class that has seen good gains in the recent days has been diamonds. And Stephen, what's your sense really, the Indian demand estimates when it comes to diamonds?
We think 2014 will be a better year than 2013. Obviously, we have to wait and see how the elections go and the impact that has on the macroeconomic environment. But I think the diamond jewelry industry in general is more optimistic that we're going to see a stronger year, particularly in the second half.
Stephen, a reaction from you as well, because the gold policies have led to issues in the industry, and has that led to buying opportunity in diamond? Do you see like that?
The gold issues certainly have impacted on the jewelry industry, and they've impacted on our retailers and our retail partners, and that obviously creates some challenges for all of us in the jewelry sector. Remembering that that diamonds are traditionally set in gold, and when you buy diamonds, you buy gold as well. So we recognize those challenges, but at the same time, it seems clear to us that the diamond jewelry has been gaining market share within the jewelry sector quite significantly.
Fair point, Stephen. Let's also get on board Mr. Prithviraj Kothari. He's MD at Riddhi Siddhi Bullion, and he joins us in the discussion as well. Mr. Kothari, hi. We were talking to the Titan Industries and also the Forever Mark, Mr. Stephen as well, and they both seem to be saying that while there is a huge premium into the Indian gold prices, the Indian consumer still has been buying onto those dips that we have seen into the industry. But today, the kind of run-up that you have seen in prices, how do you look at the range?
I think now we really should be around the 1320 levels. So I think downside should be around 1250 or 1260. So rupee, some appreciation is rupee there, but still the price is above the 30,000, and still the premium in the market is almost $80 premium.
Mr. Kothari, what's your sense on the imports really? Because while the gold imports have declined, there have been these reports of gold jewelry imports really climbing up to nearly 5 tons as an estimate in the month of January alone. How do you see that trend going forward?
No, now I think it's now when the premium is upward the 125 to $30 at that time of a jewelry coming into the market. If the premium is a $80 premium, now premium is reduced, because of the prices move above the 30,000. So I think now jewelry is stopped down, because now it's too costlier. Imported jewelry is too costlier compared to the local price of a jewelry.
Mr. Kothari, what has been your sense of the buying pattern in the Indian markets with the kind of volatile gold prices and the high premium that we have witnessed in many months now? How have you seen the buying pattern?
Listen, now it's almost the premium is too high. The investors are the sideline in the market, and huge investors are selling because the $80. They're selling in the current market, and buying in the future market. So they get the good profits or good interest rate. So if you see the investor is the sideline, just the selling is only the local jewelers are the selling the market. The supply and demand are the very low, as well as the demand also the low, as well as the supply in the market is also the low. So I think it's happened like this because when the investor is the sideline in the market, no one demand in the market, huge demand. So there is no huge demand of a gold, but it's a lack of a consignment for the exporter also and for the manufacturers also.
Sure. Mr. Kothari, please stay with us. Mr. Bhatt, I want to come to you with that question. As Mr. Kothari also is pointing out that perhaps the physical buying is not happening so much. It is more about futures and it perhaps would be more about paper gold from here on. Do you see more demand from rural India also shifting to gold-linked products then?
Yes, and government is working on such instruments, which is gold-linked instruments. But that is not going to, that will affect only one portion of society. A large part of the investment demand and the store of value kind of demand is from the underprivileged, the poorer sections of society.
Fair point. Mr. Kothari, one final question to you as well. Going forward now, what are you advising, people who are trading with you, the traders, the buyers as well, on where are the gold prices headed from here, especially in the Indian markets?
You are talking about the prices. I think prices move to on the downside around the 28,500 to 29,000 and upper side should be the 31,000.
All right, Mr. Kothari, we'll let you go at that. So 31,000 on the higher side is a possibility not ruled out from the industry there. One final question to you as well, Stephen. When we talk about diamond prices, what's your sense on that one as well?
So I've always found it nearly impossible to predict diamond prices in the short term. What I do know in the long term, if one steps back and looks after it through the cycle, diamond jewelry prices have been increasing between 4 and 5% per annum very consistently, and the larger and better quality diamonds increasing at a more rapid rate, because inherently price has to do with rarity of supply and with demand.
All right, one final question to you as well, Vijay, on the subject rather. How would you look at the prices from here on? Because the other experts are talking about higher possibilities from here in the Indian markets. How much of range would you want to give to silver prices from here on?
Manisha, at 42,000 to 42,500 levels on declines, I don't really mind dipping into silver in the physical investment space. I would start nibbling into it with allocating 10 to 15% of the total allocation made for silver alone. And I would keep some room for averaging just in case the prices dip below the 40,000 mark. I'm confident that in the second half of the calendar year, which means after the monsoons have set in and there's clarity on the election front, etc., silver will start to slowly stabilize and then move upwards from here. Over a period of time, and I'm talking about approximately 8 to 12 quarters time frame, I'm expecting silver to break out into new highs, higher than what you saw in April, May of 2011. So the percentage-wise returns in silver are possibly significantly higher than gold. But if you're talking of calendar 2014 itself, I think a retest of 54,000 on the upside is not ruled out. And in case prices do see an outlier kind of a decline, I don't give silver anything below 38,000 levels.
Okay, so that's really the range coming in out for silver, gold and even diamond out of our discussion from all of those experts. But most agro commodities have been trading on the higher side. We are dealing with early signs that the monsoons perhaps would not be in excess. And on the other side, you also have the crude oil prices which are back at around $100 a barrel. Kishore, with that kind of a scenario, how are you approaching the agriculture sector?
I think looking at most of these commodities, especially chana, which is going to be the Rabi crop, I think prices have been declining consistently for a long time, and probably we should see some kind of support coming up as we head towards the harvest season. And we've seen peculiarly in most of these commodities post-harvest season this time, at least we've seen some stability. You've seen in guar as well as chana, everything. I think we should see some kind of stability coming up. So I think post this month expiry, we will see chana prices stabilizing and probably moving up from here.
Vijay, which one are you picking up with the kind of scenario we are in right now? Where would you have a trading call?
I would concur on chana, Manisha. I've been talking about end of April or May being a time when chana prices should be significantly higher, and my level or forecast of price target of 3375 still holds. If I was to get the median farm-month futures chana at approximately 1.5-2% decline from where we are right now, I'd be a glad buyer.
Okay, so both our experts are talking about chana going on the higher side, but with that, Kishore, we'll let you go. Thank you so much for joining us with your sense on all of those commodities.